Good morning. Today is Thursday, August the 31st. We are into the last day of the month of August, and time right now in Singapore is 10:45 in the morning. Overnight, we have the release of Germany's inflation number. It's not looking good. It's creeping up again. As far as we can see, the harmonized index of consumer prices on a year-on-year basis has crept back up to 6.4% from the previous 6.2%. So this is definitely not looking good. And of course, we have a downward revision in the US GDP numbers for Q2. Previously, it was at 2.4%. The current revision bring it down to 2.1%. So this could be significant because this represents the US economy is slowly slipping. So what will the Federal Reserve do going forward is anybody guess, but one thing is for sure, we are looking into the September FOMC meeting, which is going to be held in two weeks' time, and we will have to see what the Federal Reserve does. Personally, I do not believe that they will do anything. I think they will just simply not do anything during the September. In fact, during the October-November, which actually overlaps between the end of October and the beginning of November, I also expect them to hold interest rates unchanged. But the surprise, in my opinion, will likely come 2 weeks before Christmas. I think they will hike one last round before the year end is over. So do look out for those. And market has been expecting the FOMC to actually hold its rates. And that explains why equity prices has been very resilient last night. We can see the Dow Jones Industrial Average basis, the micro E-mini futures, has gone to a high of 35,089 last night, and it has basically closed around that level at 35,035 at closing. So this actually underpin the market going forward. And do we see higher prices? I think at least for one, the 5-wave scenario that I have been mentioning for quite some time, from 35,844 down to 34,062, now has been invalidated by a simply overlap here of wave 2 low here. So technically, this would not look like a potential 5-wave down, but a new structure could actually unfold. So in the meantime, the key level to watch is how the market reacts going forward before the end of the week itself, and how it's going to close. Is it going to be above 35,000 or is it going to be below 35,000? So the next level to watch out will be 35,600 levels. Do watch out for these levels. And in the S&P 500, again, basis the micro E-mini futures, we can see that the high traded last night was rather this morning in electronic trading is 4,531.5. So this is still within my bracket of allowance, meaning to say that I do expect some kind of selling interest to re-emerge. Again, we have done a 3-way symmetrical recovery in the S&P 500 from a low of 4,350 levels. So again, it is anybody guess what it will do, but my guess is that it will trade to the downside tonight. Okay, and the level to watch will be 4,560 and 3/4, because this represents the nearest swing high here. And over in the Nasdaq 100, we can see the Nasdaq 100 is also tracing out a very neat 3-way symmetrical 3-wave rally. Ideally, I would like to see prices in between the 15,440 to 15,560 levels. Again, this is very similar to the Dow. We do not now have a 5-wave decline structure because the market has already overlapped the low of wave 2, meaning to say that a new structure is more likely to be the case rather than a 5-wave decline, which I was actually looking forward to before the start of this week itself. So you can see the prices now is a little bit firm. Let's see what happened tonight. Okay, and tonight we have the core PCE numbers, which is the number that the Federal Reserve do watch, and market expectation is that the PCE numbers on a month-on-month basis is likely to hold steady at 0.2%, very similar to what we saw in the month before. And of course, on a year-on-year basis, this number is likely to rise a little bit to 4.2% from the previous at 4.1%. So if inflation remains sticky at 4%, it is highly unlikely that the Federal Reserve will cut interest rates. Federal Chairman has already told us last week on Friday that he is likely to hold interest rate for much higher for much longer. So basically, even though there will be no rate hikes coming in September or even October, November's FOMC, he's likely to hold rates at the current level, which make it longer for higher. Okay, so the expectation among market participants is that no rate hike is positive for the equity markets, may temporarily hold up the market for a while, but I think we have to look at the other fundamentals which are beginning to show that US economy is slipping. Okay, so do watch out for those other numbers other than the interest rate itself. Okay, over in the Hong Kong itself, we can see that Hong Kong market in the Hang Seng has managed to recover back in a three-wave, very neat symmetrical three-wave rally to 18,694 in the futures contract, and is currently trading at 18,525. Now, this is an area which I also believe could actually entice seller to return back into the market, taking the market to retest the most recent low here in August at 17,539. So another decline is quite likely to be the case in the Hang Seng. Now, over in the Nikkei is also doing a three-wave rally. It has yet to hit its target. Ideally, I want to see a price to hit this 32,600 to 32,850 in the futures contract. We have which is very, very nearby the most recent swing high at 32,810. So that could actually resolve to the downside, in my opinion. Okay, and a test of 31,230 is only a matter of time. And in the dollar index, we can see the dollar has slipped a little bit. This is the second day in a row we have seen dollar slipped, and the market has actually tested a swing low here at 102.92, and it did not close below here. So this could be a basis for another rally going forward. But let's see what happens if the market does close below this line at 102.92. Then it could actually extend lower to 101.20 to 101.80 levels, which I intend to buy if the market does get to those levels. Okay, and in the dollar rates now, in the currency pairs, we are seeing a bit of a mixed structure in all the major currency pair. Now here we have euro dollars trading to a high of 109.45 overnight. And what does it mean? It means that potentially the market may actually go higher to test the 110.65 levels. That will be a very obvious level for the market to test. And if the market should pull back a little bit somewhere between where I think the market is going to hold up, which is going to be 108.55 to 108.70, that could be a buying range. And if you are going to be a short-term trader, that could be a buying area for a target of 110.65 or 110.70 in the next upswing. Okay, over in sterling, the picture looks a little bit different. It looks like it may actually come off. The price is not very far away from a pivot line at 128.05, and it could, for all I know, challenge this level before it comes back down. But currently where it is right now, it is at a high of 127.46, which is actually testing the upper range of my bracket of prices, which I think may entice seller to return. And the level is 127.05 to 127.45. So let's look out for an eventual decline below the most recent low this month at 125.48. So do look out for extended losses in the sterling. Now over in the Aussie market, the Aussie has also retraced out a very neat three-wave rally to a high of 0.6522, and this is again within the bracket of prices, which I think may actually be quite interesting to see if there's going to be any return of selling interest. That level is 0.6505 to 0.6535 levels, and if it does, then a move below the month low, which is currently standing at a 0.6364 stance. I think the market eventually will go below these levels in an extended decline. And though over in dollar yen, we see a bit of weakness overnight. The high traded yesterday was a brief rally beyond the 146.70 levels to 147, almost 37. Okay, and now the price is pulling back. There's a scope for the market to pull back in the three-wave classic pullback to somewhere between 144.40 to 144.80 levels, which is also in line with this swing low here. And this swing low here will be crucial. It must hold, meaning to say that price in the next pullback must not close below this 144.57 levels. If it does, then it could leads to a different kind of structure. But technically right now, a pullback into 144.40 to 144.85 should be a buying opportunity. Now the market believes that because the Bank of Japan has been very dovish, that means it emboldened the speculators to try to take dollar yen to 150, which is currently what most analysts are saying is where the Bank of Japan may come in to intervene. So from where we are right now, the market managed to pull back to 144 or 145. It does give us a 400 to 500 pips potential to see if the dollar yen can actually go and test the 150. Okay, so that is a personal friends, or rather what I would consider a personal preference if you want to do that. Now, dollar Canadian is also pulling back a little bit. And again, we are seeing some kind of support near the 135 levels. And if we do get a bounce here, ideally into 135.60 to 135.75 area, that could actually elicit a more robust decline all the way to test the 133.70 levels. Ideally into 133 to 133.67 levels, in which I am a buyer. Okay. And over in the crude oil has actually rebounded now. Of course, right now we know that there's a new hurricane bearing towards Florida, which is going to be an area where there's going to be a lot of offshore drilling rigs there, and those will be shut down. And if that's the case, there will be a temporary supply shortfall, and that is underpinning the crude oil prices. The high traded overnight is $82.05. I do suspect that prices, technically speaking, may actually trade downwards. I'm hoping that the market will do a three-way pullback, ideally into a new range of target at $73 to $74.75. That will be a better area to position along. Now, precious metals complex continue to edge higher on the surface of the on the face of a weakening dollar. You can see overnight the spot gold has went up to a high of $1,949 and is currently within the bracket of my target, originally set at 1,942 to 1,951.50. So right now we are within this bracket of prices. It will be interesting to see how it closes. If the markets continue to edge higher, I have an alternate target at $1,966.40, and perhaps even to challenge the high here at 1,987.4. Okay, so overall this rally here is part of that rebound that we see. Not sure whether we're going to have a bottom in place, which will be enduring going into September. But again, we have to watch. Silver has again outperformed gold. Market went up to a high of $25.01, which is not that far away from the high that we saw in July at $25.27. So ideally, I'd like to see a pullback. And again, we will have to see whether market will close below $24.61. If it does, then the scope, the odds of the market continuing to retrace lower will be great. And if the market do pull back to $23.62 to $23.95, that could be an area of buying opportunity. Okay, and let's take a look at Bitcoin. Now, Bitcoin has a major surge on the back of the news that the SEC has lost its case because Grayscale, another major player in the crypto space, has actually appealed, and they have won that appeal. As far as we know, the Court of Appeals in the state of the District of Columbia actually says that the SEC has not been reasonable not to approve the application for Grayscale to actually launch a spot BTC ETF. So this is the second defeat in a row. Last month we saw that the Ripple Lab has won its case against the SEC, and this week itself we saw the SEC losing the case against Grayscale. So back on back, that could actually cause some trouble for the SEC, because come September the 1st, or there are going to be a lot of application to launch a spot BTC ETF, and that's in the pipeline. They would have to resolve whether they want to approve or not. And now the market is getting optimistic, because this is something in favor of the digital asset space. And if that is going to be positive, I will suspect the Bitcoin prices is going to rally, and initial target has already been hit. 28,150 to 28,700 has been hit with a high of 28,180. The next level to actually watch will be 29,450 to 30,000. Okay, this area is going to be crucial because it acts as a pocket of resistance. If this level can be overcome, it will open up the possibility of a challenge of the month high at $30,800. So overall, I do see positive things happening in the digital asset space. And if the market can pull back a little bit more to 26,700 to 27,000, I think that could be a buying opportunity for those who have not already bought. So do watch out for another surge in Bitcoin prices. That's all I have for you for today. In the meantime, you take care, and I come back to you tomorrow with another update. Bye-bye.